Holy smokes, the US dollar got absolutely liquidated after the Trump tariff announcement last weekend. I'm going to show you in today's video exactly why this looks set to continue and most likely speed up into the 20th of February next month. I'm also going to show you another chart setup which is looking to explode higher in the next week. And you really do not want to miss this setup. It looks like a very good opportunity to the long side. So for those of you new to the video, my name is John Fortune. I've been trading financial markets for over 18 years. And if you want to follow along with the exact setups we're going to be looking at in today's video, you can download the free strategy guide in the pinned comment and description below. And these are the exact setups that we've used in real time to generate our members over 400% returns. So very quick breakdown of what we're going to look at in the video. We're going to start with the DXY, the US dollar pairs, Bitcoin and Ethereum. What's super interesting is usually when the dollar goes down, this is good for Bitcoin, Ethereum. But as part of this Sell America trade, which has just absolutely reignited last week with new tariffs, both the dollar and Bitcoin, Ethereum are setting up for very significant declines over the next week or so. We're then going to look at the portfolio selection using the quantitative analytics. And of course, that's going to help us find the non-US dollar pairs that are setting up nicely next week. And then we're going to finish the video, as always, with the commodities, crude oil, gold, and silver. What this means now for the price of silver and gold is anybody's guess because they're already at record levels and we're just about setting up for a major decline in the US dollar. So we could very easily see massive blow off tops in both gold and silver in the next week or so. So as always, these are time-stamped in the pinned comment and the description below. And if you do enjoy these videos and you get some value out of these videos, they help you in your trading, be sure to like and also to subscribe to the channel. Really helps the channel when you do that. And even though I say it every week, I just want to reiterate, I do appreciate every single one of you who has subscribed to the channel so far. Kicking off the video then with the DXY. Now, for those of you who watched last week's video, you know I was looking for further upside in the dollar, saying we're at this inflection point where we're building a significant base in the dollar. So we had this double bottom reversal in the daily. And then, and by the way, I was doing this video last weekend without knowing Trump was going to either announce the tariffs afterwards or during it. I can't remember if it was during or afterwards. But we started the week up in this area and we were just shy of achieving this double bottom target in the daily time frame. We pulled back, we held, so the pattern held, we started to rally, and this was sending us towards a weekly double bottom with a target up at the 104.13. So the dollar last week was building this really nice base, and then Trump came out, announced the tariffs over the Greenland issue with Europe, and these dollar bulls. Now, even though I was a dollar bull, I wasn't positioned long because I'm short-term trading mostly. And this is one of the reasons why, you know, anything can happen on a dime. So you hold long-term positions and a catalyst like this comes out, you know, you can get caught on the wrong side of it or just, you know, see a lot of profits evaporated. But last week I was, as a bias, bullish because of how we were building this base. And this catalyst just got all of these longs liquidated. I mean, this is a big problem now for the dollar, guys. This is a major issue because what happened last weekend was Trump basically destroyed this basing pattern in the dollar. And going into next week, we're most likely going to see more longs pulling their positions. Now, what I want to show you here is, because this was the weekly time horizon, this was the daily, this was the base we were building. But look at this in the monthly. This is a major, major problem for the dollar because now we actually have a potential tight bear flag breaking out to the downside if we break the bottom of this pattern. So this double bottom pattern, which was just, I mean, we were literally a week away. I don't know if, you know, Trump was told to, because they want a lower dollar, you know, to achieve the objectives that they're trying to achieve. I don't know if, you know, these basing patterns, they're pretty well known. You know, it's not like I'm the only one who can see that there's a weekly double bottom forming. Maybe they didn't want it to break. Especially with FOMC next week, could see a bit of a hawkish hold. You know, between those two things, we could have seen a bigger breakout in the dollar. And the Trump administration wants a weaker dollar. So maybe it was on purpose. Maybe it was just poor timing. It doesn't really matter. Either way, the dollar is in significant trouble now. And it is set for a major decline. We do, as I mentioned, something you just have to pay attention to. We do have FOMC next week on Wednesday. And the Federal Reserve are expected to hold, and it's supposed to be a hawkish hold. So they're going to come out, say we're going to hold, you know, rates for longer than expected. This would be bullish for the dollar. Can that reverse what we've just seen in the DXY? I don't know. You know, it is really hard to say. I don't think so. I mean, I suspect, you know, we're going to continue lower next week. We're going to ultimately after a short pullback into FOMC, probably continue lower, and we're likely to break the monthly pattern low here. And this is, this sets up a decline down to 89, 88 over the next however long it takes, a few months perhaps. Now, even though we're looking for potentially a few months down or a significant move down, I did mention the date, the 20th of February. Why? Because there is a potential lifeline for the dollar. The 20th of February, we do have the next SCOTUS opinion day, and they could potentially reverse tariffs or give a ruling against tariffs. And this would be net positive for the dollar, and it could put a significant bottom into the dollar. In fact, we had an opinion day last week. I was thinking we could actually get, the SCOTUS ruling, and that could break that double bottom pattern over here and really catalyze this to the upside. We didn't get the ruling, and we did get the tariff announcement, which ignited this kind of sell the dollar, sell stocks, sell everything. They call it the sell everything American trade. So that's where we stand going into next week. We have to have this base case of a break of the lows, but just keep an eye on this with FOMC next week. I'm going to show you though in the dollar pairs why we are setting up for significant declines technically. So kicking off with euro dollar, you can see that we had this massive rally last week. I am only looking to be a buyer of euro dollar heading into next week. The US dollar is, as you can probably tell, my top theme to the downside, so my top short theme, even though we do have FOMC. And we also last week had a 3 standard deviation move on the week, which means we didn't just hit the second weekly upper bound, we hit the third weekly upper bound. Now, what's important to note about that is very often that actually quantitatively produces blow off tops. Very often you see that at a significant high. Are we going to get this reversed on FOMC? I don't think so. That's not my base case, because when you're looking at blow off tops or significant momentum, I'm going to tell you the 2 different ways that you can use to differentiate blow off tops from breakouts. And that is that if you are seeing a kind of, in this case, 3 standard deviation move because we hit the third upper bound, and you're coming out of a big kind of consolidation, that tends on balance to actually be the start of a much bigger trend. If you have a 3 standard deviation move like this on the week and you're already trending, then it tends to be a capitulation, a blow off top, sorry. And if you have it to the downside, it's a capitulation low. So it's not just as simple as having a 3 standard deviation week and it producing a major top. If that happens as you're breaking out, at the start of a move, it actually tends to be a sign of a new trend as opposed to a reversal. So just something to note quantitatively, it was extreme momentum, something you would only expect to see, less than 99% of the time, which is, 3 standard deviations. To cut a long story short, I am looking for potential longs in euro dollar. I would ideally like to see it below the 1.17184. This almost certainly has to pause and correct. So if you jump into this, even if it pops higher a little bit, it's probably going to come down for a day or 2 before FOMC, because it's just such a strong move. It has to pause even if it's going to continue. So I ideally would like to see this kind of consolidate into FOMC, and then you've got the option of waiting to see if it pulls back into the buy zone, which is below the 1.17184. So this is where I'll be looking to buy the dip at the prior high over here. So a breakthrough and then a stair step back. And we also have FOMC, so you could just see the breakout intra-week. If we're going to have a look at this on the multi-charts, I would expect this to kind of pull back and consolidate, most likely into FOMC, and then you may get the continuation after FOMC. So either way, I wouldn't really be interested in the dollar pairs until FOMC takes place, because they're most likely, based on the fact we had such a big move, even if it pops higher and it looks like it's going to continue, it's probably going to be a bit of a bull trap because it's just so extended, it has to pause for a couple of days first. So I'm only interested in the dollar pairs after FOMC. Next is pound dollar. Now there's actually 2 setups I'm considering between kind of Monday and FOMC on Wednesday. And the first one is, of course, if we do get that pullback and we test the lower bound, the buy zone, in this case, the 1.35226, that would also be right at the prior high, and it would also be into the moving average. So it's that dip and flip setup for 1 or 2 days that I'll be looking for. Again, all of this is in the strategy guide down below. And there is another setup here because we had such a big move up. For those of you who have already been through the free strategy guide, can you guess which setup I'm talking about? it is a Monday, Tuesday reversal play because we've had such a big move up. You know, markets don't move in a straight line. So what is most likely going to happen is this needs to pause and correct before FOMC. Remember, on FOMC, we could actually have a hawkish hold, which would be bullish for the dollar. The problem is, I don't think it's going to be enough to reverse this. So at the very least, I think we could have FOMC and then it pushes down into the buy zone and we use that for the dip and flip setup. That's what I'm looking at probably happening. But think about this. There's two parts to this, right? If FOMC is right here, and this is the same for all the dollar pairs, then Monday, Tuesday into Wednesday, we're probably going to sell off. We'll probably pause here around this area. Then we get a hawkish hold. We push into this, and then that probably be where, you know, we start the next leg up, and I'll be looking for that setup here. So there's two potential setups that I'm primarily looking for. If we get that, as I was warning, you know, that pop higher on Monday, I was saying to you, it's probably going to be a bull trap. That is a potential setup for a 1 or 2 day reversal into FOMC. It's a little bit more advanced. It's kind of expert level because if you get it wrong or you time it wrong, you know, and FOMC disappoints, the next move up in the dollar pairs, you know, could be quite strong. So you don't want to hold on to those if you're on the wrong side of it. But there are two potential setups at play here in the dollar pairs. So a pullback for 1 or 2 days, especially if we get a pop higher. I'd like to see a pop higher first on Monday. And then on FOMC itself, I'd be looking for a hawkish hold and for the dollar to come back and test potentially the buy zone. And that would be my opportunity to buy in the direction of the momentum last week. So again, that applies for all of the dollar pairs that I'll be looking at as we go through today's video. Next is US dollar yen. Now, I do think we are setting up for a major move down in US dollar yen. We had the tariffs, which was massively negative for the dollar last week. And then we also had the BOJ yesterday, where they held rates and they raised their inflation forecast going forwards, which was a bullish catalyst for the yen. So out of all of the dollar pairs, I do think US dollar yen is in the process of, in my opinion, probably making a major top. And I think this is the start of actually a strengthening of the yen. So what I am looking for next week is if we can pull back in US dollar yen, I would like to see it test the left shoulder. This is setting up a textbook left shoulder. So what happens is when you have these chart patterns, they tend to morph and they go through these kind of stages. So you start off with, in this case, an ascending triangle. You get the breakout. And in fact, it's not quite an ascending triangle because it hasn't already tested it. If that had tested it, there would have been ascending triangle, but it's actually building kind of higher lows. And it's kind of selling off at the top. So it has the same psychology, but it's not technically an ascending triangle. But it breaks through the high of this pattern anyway. I mean, even if, you know, with the lower high, you'd probably be looking at this more as a kind of, this kind of triangle. A little bit more of a, bit more of a pennant or not quite symmetrical triangle. But you'd be looking at more like that because it didn't take out the high. So it attempts to break through, it fails, and then what happens is it comes back and retests it, and that actually turns into a textbook head and shoulders. So the right shoulder next week at the 157.89 actually sits in the sell zone at the 157.96. So again, think about this, because there's a whole bunch of setups kind of rolling into one here. We have the big sell-off. We probably get a push, you know, maybe a little bit more of a pop down on Monday. Then we get this kind of Monday, Tuesday reversal pullback into FOMC, potentially get a hawkish hold into the left shoulder. That would actually be an opportunity to look for the aggressive right shoulder because, you know, confirmation is actually a breakdown here. Trading the right shoulder is the more aggressive entry. This is the less aggressive entry. But because we're entering into the sell zone and we have the left shoulder, this is where I'll be looking to sell any rips in US dollar yen next week, most likely after FOMC. So potential Monday, Tuesday reversal play, FOMC pushes it into here for a right shoulder. That's what I'm going to be looking at in real time with members next week in US dollar yen. Next is US dollar CAD. Now this is a super interesting chart for a couple of reasons. First and foremost, look at how bearish this is. And what makes this especially bad for the dollar is the Canadian dollar is also very weak. And it is actually one of my top shorts heading into next week as well versus other currencies, as we'll see soon. Now, the reason I've pulled this up with the sentiments on the left, again, because those of you who have been through the strategy guide, you will see not only do we have 2 setups here, we actually have 3 setups here because we also have sentiment down here on a rolling daily basis, which is now overextended. And those of you who have been through the strategy guide will know that this is an extended reversal play as well. So that's a counter trend play. You know, if a market is sort of trending to the downside and it gets super extended, what will happen is it will usually trade below second, sometimes third, weekly lower bounds or upper bounds. It will turn oversold on a rolling daily basis quantitatively, and we use that for a 1 or 2 day bounce to the upside. So this is why you put all the pieces of the puzzle together. In my opinion, and again, we may have a little bit more of a pop down on Monday or push lower, but I do think we are setting up for a pullback, whether we pop lower first or not, into FOMC. Look, we could continue straight down on FOMC if FOMC disappoints, but I suspect they're going to come out with a hawkish hold, and that would take us back into the sell zone here. So this is where I'd be looking for a rip into, in this case, the sell zone, which starts at the 137.98. And we also have this kind of left. We're setting up, again, a kind of failed breakout, liquidation through, pullback and a retest. It sets up a kind of head and shoulders setup here to the downside. So only looking for short positions in US dollar CAD. Have a quick look at this on the multi-time frames, because as you can see here, look at this in a monthly. We had this pattern and we broke out of the high. This is in the monthly time horizon, guys. Big rally up, a liquidation through. We bounce at the trend kind of bottom. In fact, the trend is from here to here because this hasn't made a new high, but I've just moved it down so you can see the new pattern forming with a failure at the left shoulder is this head and shoulders. So a breakthrough here on the monthly time horizon, which is right here, is a very, very significant reversal in this pair. And that really confirms everything else we've looked at, which is that the dollar is in big trouble because the Canadian dollar is also very weak. It is something I'm looking to short next week, but I'm looking to be short the US dollar versus the Canadian dollar. So that puts the US dollar as my top short theme, followed by the CAD. I still don't want to buy the CAD unless it's against the dollar. So that's what I'm looking for in US dollar CAD next week. The Australian dollar, as we'll see soon when we go through portfolio selection, is actually my top, or one of my top long themes going into next week. Overbought on a rolling daily basis, which means what? This is a Monday, Tuesday reversal play, or rather this is an extended reversal play because we're extended to the point where it needs to pause or correct for a couple of days. It's also a Monday, Tuesday reversal play because we're at the weekend and we're heading into Monday with this. And remember, Monday, Tuesday reversal play is an extension of the other setups that we look at. And we also have FOMC on Wednesday, which tends to see markets pause or correct into the meeting. So you can see the logic behind why I'm looking for a potential pullback, even if we pop higher for 1 or 2 days, and then FOMC, you know, either to kickstart the next move up, or if we get a hawkish hold, we'll be looking for that kind of dip down. Moving average will follow it. And I'll be looking for the flip for 1 or 2 days higher. Probably that will be the start of the next swing trade up, you know, but I like to, especially with the strategy we run with members in real time, look for just 1 to 2 days worth of volatility. That's kind of my mandate. And yes, you can hold on to things for longer, but that really is the mandate that I'm looking to capture that profit objective each time I take a trade in the short-term trading book. Now look at Aussie dollar on multiple time frames here. This is extremely bullish. Now on the monthly time horizon, this is actually, I mean, look at this down here. We have this rally. We then come down and we failed to take out the low, and now we're looking to break above here. Guys, if I was looking at this on a 1 hour time frame, 4 hour time frame, I would be expecting this to take out this level fairly easily. I mean, that is where I'd be looking at least. Because at that point, it becomes either an ABC or it becomes a, which is where it fails there and it turns down, or that actually kickstarts a third wave. And that becomes the start of a much bigger trend higher. I mean, you know, taking fundamentals out just for a moment, I mean, this could very easily, if it breaks to 0.80071, technically, you know, come up to this high or even back up to here. That seems unthinkable. And, you know, we can't in reality just dismiss fundamentals. There are lots of things that could happen before a technical move like that would play out over such a long time. And I suspect maybe, you know, the dollar sell-off will get derailed by a SCOTUS decision at some point reversing tariffs. But just technically, you can see, you know, I would not be surprised at the very least to see Aussie dollar making its way up to here, unless it's derailed by the SCOTUS on the 20th of February or, you know, shortly after that. And the final dollar pair before we move on to Bitcoin and Ethereum is New Zealand dollar. Again, we have this extended reversal play. Hit the third upper bound. This thing needs to pause and correct for a couple of days, and I suspect it's going to do that into FOMC. and potentially also Monday reversal play, especially if it pops higher. I probably will be looking to short that between Monday and into FOMC. Then I'd probably be out to book profits and then just see what happens on FOMC. If it continues down, that would be the opportunity for a potential dip and flip for 1 or 2 days. Interestingly, if I pull up the multi-charts here, maybe New Zealand dollar is kind of technically giving the game away a little bit, because this is not as bullish as, the Aussie dollar chart we just looked at. So I question whether, I do think we're going to come up and test this high, over the next month or so. But you could easily make the case here for a push into the top of the descending triangle. And then we could see there or thereabouts, within a month or two, the SCOTUS decision potentially reversing tariffs. There's about 72% chance that they rule against Trump's tariffs, which is why I'm talking about, a potential lifeline for the dollar. And, that's the kind of scenario we could see where we get a continuation of the dollar, because I am expecting the dollar to go higher this year. I am expecting the metals to come down, but are we going to see, significant weakening of the dollar over the next month or so until the SCOTUS decision, which could potentially reverse tariffs and, a kind of blow off top in the metals? That's definitely possible. Okay, moving on to the multi-charts to look at Bitcoin. We looked at this last week and I noted that we'd broken out and we were holding the top of this ascending triangle pattern. But what did I say to you guys? This is not a fantastic setup because we're below the weekly. It's a weekly pattern and we're below the weekly moving average. So what I said to you was, if we break this low right here, look for a strong liquidation back inside. And then if we break out the other side, that's when you can turn negative. And we did get the breakdown on the tariff announcement. Again, you expect the dollar to sell off, Bitcoin, Ethereum to rally, because especially here they're priced in that currency. But for whatever reason, maybe there's some fundamental issue. I don't claim to be an expert in crypto fundamentals because I can look at them technically and I understand what's going on. But for some reason, Bitcoin and Ethereum are setting up for steep declines. And so going into next week, the place at which you really need to pay attention to is this low here, because we had this strong liquidation. Some traders have stepped in to buy this dip at the lower trend line. But let me show you something about this compared to previous moves. Notice this one, and then we bounce. Then we have a sell-off, and then we pause, we push up, we bounce. Okay. Compare that move down into the trend line before with this one. Guys, this is momentum. Momentum precedes price. And what's happened is a whole bunch of traders have bought this trend line low. They're buying counter to the weekly time horizon. And if you hadn't already noticed, we now have this double pattern, which is we've got this momentum in the daily followed by a consolidation. And we also have momentum in the weekly followed by a consolidation. So now what you've got is you've got this pattern, which is a big bear flag, and you've got the same pattern, a mini version of it right here, which means if we break this low in Bitcoin, I expect a pretty substantial liquidation. And why? Because what's going to happen is these traders who have put stop losses down here and bought are going to get liquidated. And this is going to start charging down towards the prior low, which is where all the traders who tried to buy the dip over here have got stop losses. And when that gets taken out, you're going to have this kind of, most likely, I'm just telling you what I think is based on, nearly 20 years of experience. We're likely going to see stop losses liquidated below here. It might come down and test it and bounce like this. I'm not saying it can't do that. It might test it a couple of times. But I expect, buyers to give up in this area somewhere below this, even if they attempt to hold it for 1 or 2 more times. And when that happens, guys, I would say we are highly likely to come down to this prior low. And I suspect probably, almost a 1-to-1 of this down to 50,000. Again, what the fundamental reason for that is, I don't know, but you can tell by the way this is setting up that, the risk is massively to the downside. And this is the low next week at the 87, 170 roughly. This is the low I would look out for, because below this, you could see a very strong liquidation to the downside Bitcoin. The next is Ethereum. Now, Ethereum has the same problem. It attempted to break out of the symmetrical triangle last week, and it was sitting at the top at the beginning of last week and attempting to rally. And again, I said to you, if we lose this low, you can expect a strong liquidation back inside the pattern. Why? Because this is where I expected stop losses to be, because I could see people had bought the dip and they're going to be using, you know, a whole bunch of them will be using a hard stop. And when that gets liquidated, they pull their positions, you know, and that turns into a short move. So again, you know, really just looking at the same thing. We're now sitting in a place where traders are attempting to buy. I mean, it doesn't look pretty, does it? We had this big kind of up candle and now it's doing this. But stop losses are most likely going to be down below the bottom of the pattern here from people who are trying to bounce this back up. And you can see we're contracting. And if you lose this low down here, this really sets up anywhere between the 2000 and the 1500. So we're really talking about fairly substantial declines in both Ethereum and Bitcoin on the cards. I mean, next week, we're talking about next week. If we take out this low, that's where we could start to see a strong liquidation. If we take out this low and we bounce strongly, then, you know, you could actually look at it. Let's say you take out the low and you have a stop loss up here and you get taken out, it'd be a double bottom, right? But I don't think that's going to happen. I suspect my base case, if we do take out this low and it has to break first, because this is where the stop losses are, that can accelerate it to the downside. But if we do break this low, I think we are setting up pretty substantial moves to the downside. First of all, you know, to at least 210, if not down to 1500, which is this kind of range low down here. You can see we kind of failed at the top of the range here. So there's kind of a minor range low down here, but I think this could actually, this could really take us all the way down to 1520. So pretty bearish on Ethereum, but it does have to break this low specifically. And you will know if stop losses have been liquidated because you will start to see a clean break, a very strong move through that low next week. Okay, so moving on to the portfolio selection, and when we go through some of these other markets next, I'm going to do a little bit of a speed run because we took longer on the dollar pairs this week and I don't want to make this video too long. So in terms of portfolio selection, you can see I am looking for the Australian dollar to the long side, the Swiss franc to the long side, and the New Zealand. Those are my top three. With the US dollar, the number one short, also the pound and the Canadian dollar. So, you know, you can look at, we've looked at Aussie dollar to the upside, pound Aussie to the downside, Aussie CAD to the upside. We've already looked at US dollar Swiss franc, but you could also look at pound franc to the downside and CAD franc to the downside, and also pound New Zealand to the downside and New Zealand CAD to the upside. Those are the pairs outside of the US dollar pairs that I like and at the top of my watch list heading into next week, and we're going to have a look at those now. Okay, so kicking off the watch list with pound Aussie. This was a top short idea from last week's video and we had a big sell-off. So looking once again for potential short opportunities, I would like to see this pull back into the sell zone, which is above 1.99891, and a move into the moving average. And this high right here is where I'll be looking for a failed breakout for a 1 or 2 day reversal. So we have that rip and flip setup because this is now a downtrending market after the breakout here. The volatility target is 1.96037. And if we go and look at the multi-charts, we also have a technical target at the 1.94447, which is this symmetrical triangle breakout, which I highlighted last week. And you can see this is a weekly consolidation underneath the moving average. And now we've got this big sell-off. I would be looking for this target, you know, if not next week, could happen next week, but over the next few weeks. Either way, I can only be short pound Aussie next week or do nothing. Cannot buy this market next week. Next is Aussie CAD. Now this is a buy or do nothing for me. I cannot short this market. Going into next week, we do have a couple of things. So we have the Canadian dollar with an interest rate decision on Wednesday, and we have the Aussie dollar, which has a CPI on Wednesday as well. So Aussie CAD is probably going to pause and correct heading into early next week because, as you can see, with such a big amount of volatility, we do have an extended reversal set up potentially, and also a Monday, Tuesday reversal. But this is counter trend. It's a counter trend move. So my bias is really to buy this. I can only be long or do nothing. If I sell it, I'm trading counter trend. So I can only really do that if we have this kind of a setup. Do I want to sell Aussie CAD though going into next week? Not really. I'd probably prefer, you know, the dollar pairs. It is very difficult to say, but these moves are so strong that I almost don't want to get caught on the wrong side of them. So if we get the opportunity and we can time it well, which essentially means if we get a pop higher on Monday, then I may consider some of these reversal counter trend plays. But the main thing I'm looking at is a pause into Wednesday a pause and a correction into Wednesday, and then a potential dip down into the buy zone, which is at the 0.93572. And of course, this would be a dip and flip setup because this is a trending market after the rectangle breakout we had. So ideally looking for the long setups. I do have a bullish bias. I can really only buy it or do nothing. But because we have a potential counter trend setup, I may consider that if we pop up on Monday. If you don't want to trade counter trend, and I don't really like doing it, honestly, then there's nothing wrong with just sitting out and waiting to buy the dip in the direction of the move. Next is pound franc. I can only short this market or do nothing next week. Now, pound franc, as you can see, is a range reversal play. The moving average is moving sideways and oscillating, and we have a range. We've got the top of the range over here, the bottom of the range here. So what I'd like to see is I'd like to see this push higher, move into the top of the range and the sell zone, which is at the 1.07337. And I would be looking for a 1 or 2 day reversal back towards the moving average at the prior high over here, which is a type 1 resistance. Why? Because in the past it pushed price down. Better still, it pushed price down twice. So that's what I'm looking for in pound franc next week. Next is CAD franc. I can only be short or do nothing heading into next week. You can see CAD franc is actually broken out of this kind of range over here, actually kind of sloping down a little bit. And so any kind of pullback, especially if it's sharp, would actually be a rip and flip setup. Unless it kind of meanders, and it could actually turn into a range reversal, but to the downside it kind of does this. But ideally what I'm looking for is a sharp pullback, a breach of the 0.57526, and as we trade into the sell zone between these two levels, which is where we become overbought during the week in a market I'm looking to be short, we have confluence with the downward sloping trend line. So this is where I'm going to be looking, right at the 0.5753, let's say, for a 1 or 2 day sell-off in this market. If we do bounce from there, it'll be the third touch of the trend line. You can see sharp moves from that. But again, my mandate, especially when we're doing this in real time with the members, is just to capture 1 to 2 days at a time. Next is pound New Zealand. I can either be short or do nothing. You can see we were oversold on a rolling daily basis, and we got that information right here on the close. And the following day, we snapped back and this neutralized. So I do expect this to continue to pull back. There is no kind of confluence here we can look at with support or resistance because they're both, you know, kind of above the midpoint of the range. So the midpoint of the range is kind of here, and anything up here, you know, is less useful because by the time we get into the second half, we could easily be making our way to here. So this does need to pull back, you know, most likely into Wednesday. What I'd like to see is for this to pull back and use the moving average over here for a pullback. And I would also drop down to the 4 hours. And as it pulls back, you know, look for the 4 hours and the 1 hours to make their own kind of double top highs like this. When there's a lack of confluence, this is what I look for. I drop down to lower time frames, 4 hours, 1 hours, even down to the, you know, the 5 minutes. And I'll look for essentially the market to form its own resistance. And then as it starts to fail at that resistance, that's when I'll look for a 1 or 2 day liquidation. This still, you know, needs to pause and correct most likely into Wednesday. I think, you know, on FOMC on Wednesday, we're going to see a lot of these markets start to move. And the final Forex pair before we move on to the commodities is New Zealand CAD. This is an extremely extended market. It's a Monday, Tuesday reversal play, and it's an extended reversal counter trend play. Such a strong move. I do expect this to neutralize before the Bank of Canada on Wednesday, which means if we pop higher, I will consider shorting this tomorrow above the highs because I anticipate this to wash out, to neutralize again in terms of sentiment. It has to pause and correct, and it's most likely going to do that. Profit taking comes in before the Bank of Canada. I expected that to happen last week, didn't happen last week, but I do think if this pushes higher on Monday, that will set up the opportunity to fade this, which just means selling in strength, into Monday, Tuesday, Wednesday for a Monday, Tuesday reversal play. So I will be looking for that because this was so extended last week that I think the odds of a significant snapback for a day or two is high between now and Wednesday. But I'm not just going to jump in anywhere. I'd like to see it pop higher first, and then I'll consider shorting it around the open on Monday morning if we get that set up. What I do want to see, though, is I want to see this pull back, perhaps by the end of the week, stair step the prior high, and this is where I'd be looking for a 1 or 2 day reversal to the upside. So that's what I'm looking for in New Zealand CAD. I do have a bullish bias, but because it's so extended, there is a potential counter trend trade for 1 or 2 days at the start of the week, especially if we can pop higher. That's how I'd like to potentially time it. Okay, so moving over to the multi-charts to look at crude oil before we go to gold and silver to finish the video. This is the chart that I was talking about at the beginning of the video when I said there is a market setting up to explode higher. It is crude oil. Now look at what we have here. We have this inverse head and shoulders. which has broken out, and the pattern has held. We came down, we tested the 58.95, we held, and what we started to do, that was in the daily time horizon, and what we started to do was build higher lows, and we have this third touch of the trend line, which often produces an explosive move. We've now taken out the high, and we're about to make a run at the high, which was the breakout of the inverse head and shoulders and the retest. So we've got this kind of, you get this kind of break, stair step, and the next move tends to be explosive. There is a famous trader called Bill O'Neill who actually had this exact kind of setup, which is called a base on base. Some of you may know it, some of you don't, it doesn't really matter. But the point is that it's when the market breaks out, and instead of going straight away, it pauses and consolidates and holds at the breakout level. Then the following move tends to be explosive. So we have a combination of things here, and we also have a double bottom low, which for those of you familiar with the original turtle traders, this is a turtle soup. And that's where you come down, you test the low, and you fail back inside. But anyway, we've got a whole bunch of major technical patterns here which are setting up for a potential reversal to the upside in crude oil. It's the break of, and I think this could pretty much start to go on Monday or Tuesday. If you think Forex is going to be a bit slow Monday, Tuesday, have a look at crude oil, because that's probably going to, I think that's probably going to start to push up Monday, Tuesday into Wednesday before FOMC. And it's the break of the 62.36 that could really rocket this to the upside, because again, you've got stop losses here. People have tried to sell this and they're anticipating this to break back through, and their stop losses are going to be right here above the 62 point, let's say 40. So keep an eye on crude oil. I do think there is a significant risk of this market exploding to the upside next week. Okay, so wrapping up the video with gold and silver, starting with gold. Look at this. Oh my word. This is extremely overbought on a monthly, weekly, and daily time horizon. 1, 2, 3, 4, 5 days up, so this does need to pause and correct. The buy zone next week in gold is the 4802.02. Now, the only thing you can look for, there's no point of reference to the upside because it's all-time highs, and there's no key area support to the downside because it's so volatile. So the only thing you can really do is look for this to move down into the 4802.02. Again, I wouldn't get involved here. It does need to pause and correct most likely. I would not counter trend trade gold and silver. It's not the same as Forex. Forex, you have monetary authorities controlling the currencies, you know, through interest rates, even making comments, etc., etc. They're trying to reduce the volatility of their currency. So, you know, taking extended reversal play in Forex does not necessarily translate to shorting gold at all-time highs. So I'm only looking to be a buyer, and I would look for a pullback and a consolidation below the 4802.02. The moving average as well in the daily time horizon, you know, that kind of dip and flip setup, it's really all we can hold on to at these levels because there's no resistance or support to the upside or the downside. So we need a pullback after 5 days up. And last but not least, we have silver. Somehow I forgot to put this in the video last week, even though I recorded it. Apologies for that. But again, this is why you don't counter trend trade commodities, because you can have huge moves. So I would like to get involved in silver for buying the dip. The range starts at 98.14. And so looking at this in the 4-hour time frame, the 98.14 is around here. I would look for the 4-hour pullback, and it would basically be a 4-hour bull flag because we've cleared the prior high. So I'd be looking for the pullback and at least a test of new highs. So that's the kind of dip I'd be looking for. But look at this, guys, this still has to pause and correct. I'm sorry, at some point this is gonna have to pause and correct. The fact that we're now getting the dollar potentially selling off hard, I don't know what could happen here in silver, but it looks to be setting up for a massive blow off top. Either way, I'm only looking to buy dips next week in silver, especially below the weekly lower bound. I cannot counter trend trade silver. Who knows how high this thing can go, but at some point it's going to snap back violently. And I think that's going to happen this year, probably if the SCOTUS rule against the tariffs and we start to see the dollar forming a bottom. So that is it from me for today, guys. As always, I hope you enjoyed today's video. And if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.